Welcome to Accountancy Academy. In my earlier video, I have already discussed about double entry system. Please see my earlier video regarding double entry system, which become helpful for you to understand today's discussion about accounting equation. Further today, I am telling in short about double entry system. Every transaction in a business has two effects. One is called debit and other is called credit. In order to ascertain debit and credit of a transaction, we have to follow three golden rules. Number one, for personal accounts, debit the receiver and credit the giver. Number two, for real accounts, debit what comes in and credit what goes out. Number three, for nominal accounts, debit expenses and losses and credit incomes and gains. For an example, purchase furniture for cash rupees 2000. Here the transaction is related with real account. As per golden rules, what comes in will be debit and what goes out will be credit. Here furniture is coming in, so furniture account will be debit, and here other asset cash is going out and as expenses, so cash will be credit. These golden rules we have discussed in brief in my earlier video. Now we discuss about accounting equation. If we can understand the basic rules about it, it will be very easy for us to record the related accounts of a transaction. In accounting equation, these rules are being followed. A plus E is equal to C plus L plus R. A representing asset, E representing expenses, C representing capital, L representing liability, and R representing revenue, that is income. Now it may be said that debit A and E when they increase and credit A and E when they decrease. A here representing asset. Asset are those articles of right in terms of which the liability of the business can be redeemed. Land, building, machine, furniture, stock, cash, bank deposit, receivables, copyright, patent right, etc. are all examples of asset. Assets may be classified into several aspects, which will be discussed later on. Now we see journal and ledger entry when asset increase. Purchased machinery for cash rupees 20,000. Journal entries will be machinery account debit to cash account credit, being the machine purchased and paid cash. When the value of the asset decreases, then asset account will be credited. Here, number 2, depreciated machinery by rupees 2000. Journal entries will be depreciation account debit rupees 2000 to machinery account. Depreciation is a loss, so depreciation account will be debit, and the value of the asset is decreasing, so the machinery account will be credited. Now we see the ledger of machinery account. If these journal entries are recorded, here the machinery account has been debited for rupees 20,000, as the value of the machinery in the business has been increased, means it has been treated as a plus. Here rupees 2000 has been credited because the valuation of the machinery has been decreased for depreciation. The effect to the valuation of the machinery is minus. The rule relating to accounting equation can be shown in the following accounts for more clarity. When asset increases, it indicates plus, and in such case, asset account will be debited. Whereas, if asset decreases, it indicates minus, and asset account will be credited. If expenses increase, it indicates plus, and in such case, expenses account will be debited. Whereas, if expenses decreases, it indicates minus, and expenses account will be credited. Liability is always considered at a credit figure, so when the liability increase, it indicates plus, and liability account will be credited. Whereas when liability decreases, it indicates plus, and account will be debited. Revenue means income is always a credit figure, so when income increase, it indicates plus, and income account will be credited. Whereas when income decreases, it indicates minus, and income account will be debited. As liability account, capital account is always considered as a credit figure, so when capital increase, then capital account indicates plus, and capital account will be credited. Whereas when the capital decreases, it indicates minus, and capital account will be debited. Now I discuss about some transaction and journal entry for showing effect in accounting equation. Number 1. Started business with cash rupees 5,000. Number 2. Purchased goods for cash rupees 200. Number 3. Paid for expenses cash rupees 50. Number 4. Sold goods for cash rupees 150. Number 5. Paid salary rupees 100 to the cashier. Number 6. Depreciated building by rupees 50. Number 7. Received dividend rupees 75. Now we see the journal entries and accounting equation for the stated transaction. Number 1. Started business with cash rupees 5,000. Here journal will be cash account debit rupees 5,000 to capital account credit rupees 5,000 because cash is coming and it is an asset. When the asset increasing, it indicate plus and it will be debit. And the same cash is invested in a business as a capital. Capital is always a liability, so cash account debit to capital account credit. Capital credit means capital increasing. In accounting equation, these are mentioned as cash rupees 5,000 as A asset is equal to capital rupees 5,000 means C. Next transaction number 2, purchased goods for cash rupees 200 and journal entries will be purchase account debit to cash account. Here purchase is considered as expenses and all expenses will be debited, and cash is a asset, cash is going out, so cash will be credited. In accounting equation, cash is an asset and when asset is decreasing, then it will be minus and expenses will be debited. When expenses increasing, it is considered as a positive, as plus. In accounting equation, These transactions are stated here. Next transaction number 3, paid for expense cash rupees 50, and journal entry will be expenses account debit to cash account, because all expenses will be debited and cash is going out, cash will be credited. In accounting equation, these are mentioned. Here the amount of rupees 50 is decreasing, so this amount of rupees 50 has been considered as a minus, and expenses rupees 50 is increasing, so it has been considered as plus. Next transaction number 4, sold goods for cash rupees 150. Journal entries will be cash account debit to sales account. Here cash account is considered as debit because cash is increasing and coming, and sales account has been credited because sales is considered as income. In accounting equation, cash is treated as an asset, and when asset increase, it is treated as plus. Sales are income and considered credit figure, and when the sales increase, it is considered as plus. In accounting equation, R is representing revenue. Revenue means income. In this video, I have discussed about rules applicable in case of accounting equation. I will come again in my next video, in which I will discuss about journal entries, ledger accounts and trial balance. Please like and share my video and subscribe to my channel. Wish all of you success and good luck.